most respected members, distinguished guests, Radhe Radhe, good afternoon. On this proud occasion of the Golden Jubilee, I, as chairman of the Berhampur branch, get opportunity to initiate this technical session. My heartfelt congratulations to entire EIRC team for their continuous service of 50 years and for excellent service to the nation building. Now, with dignity and warmth, I invite esteemed dignitaries to the dais. First of all, our moderator, C.A. Ravi Kumar Patwa, my teacher, guiding the session with balance and clarity. Our honor of the panelists, whose insight and experience will enrich the deliberation. Deboka Debasis, our past president, Dr. Debasis Mitra. C.A. Raveen Banerjee, bright of fame, our distinguished speaker for the past, present, and future. That means yesterday, today, and tomorrow for the session whose presence brings immense value of the special celebration. And Sri Sarvani Bhattacharya symbolize the session convener of the program whose dedication has ensured the smooth organization of this Golden Jubilee. I respectfully welcome each of the two days seats. I request Sri C.A. Sri Hariram Goel to felicitate Raveen Banerjee. Now I request Sri Devasis Mitra proceed the meeting.
Very nice. Good afternoon, ladies and gentlemen, and my professional colleagues. I hope all of you are having a good time. Enjoyed Manojji speaking yesterday in the evening. Must have made you think about your life and things like this. But today, we are going to talk about a most serious matter. The profession, that is chartered accountants. Yesterday, today, and tomorrow. Very, very important topic. I have two very important panelists, esteemed panelists, Robin Banerjee from Bombay. Many of you would have followed him. He's written books, he writes articles. And of course, Ravi Patwa, he's a Central Council member, and most important, the Vice Chairman of Audit and Assurance Standards Board. And I also acknowledge the presence here of Rajendra Kumar. He is a Central Council member, and at some times I'll refer him, the person, GST, the Board of the Discipline, he's doing so much of work. And of course, the gentleman sitting next to him, Sushil Goel, with whom I have had the pleasure, I will say, of spending 9 years in the council. Chartered accountants yesterday. Yesterday when he was saying, I said that we were formed way back in 1949. You know, after we were formed, the institute, it never had a lot of legal protection. Till 1956, Companies Act 1956. When we had this audit which came our way. And by the way, we are one of the very few profession which has this kind of legal protection. Like the government, says that, okay, all right, the audit has to be done by you. So the first change was 1956. Before that, once G.P. Kapadia took over in 1950s, You see, he didn't have this, he was more involved with regulatory function, right? So you see, we then came the audit, 1956, and then you see, came the Income Tax Act 1961. With Income Tax Act 1961 came one section 143.3, that is a scrutiny assessments. Mind you, at that time, it was all scrutiny and physical assessments. But with the coming of 1961, also the chartered accountants were there doing audit, doing accounts, and doing income tax. Now, mind you, I'm not talking about, when I talk about income tax, I'm talking about direct taxes. Indirect taxes was really not our forte at that point of time. What got things moving was 1985. That was the year when tax audit was introduced. Section 44AB came into the statute book. And then with the coming into force of Section 44AB, the chartered accountants suddenly had a huge opportunity of carrying out audit. And mind you, there were turnover limits, but with 44AB, the tax audit, it was opened up. And what happened? You had the company audit, you had the tax audit, and then you had the bank audit. So the chartered accountants, yesterday's chartered accountants, were fed on, a palette or on a diet of audit which was provided to them by the government of India. And then, of course, on the other side, you had chartered accountants who were practicing income tax, who were doing very well in income tax, but 1985 was a game changer. Matter carried on in this similar manner, and the chartered accountants, they were, doing things and having a good existence. The profession was doing well. And then we also had presidents at that time. I'm talking about what was happening to the institute. We had presidents like R.C. Cooper. Yesterday I was quoting him. He went on to say that whatever is legal, but if it is not ethical, a chartered accountant cannot do it. We had those kind of thoughts. R.C. Cooper, right? And Mr. Cooper, by the way, challenged Indira Gandhi in the, for the nationalization of the banks. And Indira Gandhi was very, very, annoyed with R.C. Cooper. But then the point I'm trying to make is, at that point of time in the 60s and the 70s, we had chartered accountants of that kind of stature. People who used to speak that language. Today we speak about ethics. We had a Bansi Mehta at that point of time, who'd say ethics are absolute and not relative. That was the chartered accountants of yesterday. They were speaking those kind of language, but then we moved on. The great change came in 2000. Accounting standards were there, but we are not following because accounting standards were not mandated by the Companies Act. So we were not following them so much. But we had our Accounting Standards Board of the Institute, which was set up, I believe, in 1977. So it was set up and it was doing a lot of work. But then in 2006 came the first. In 2006, we had the first set of accounting standards, Companies Accounting Standard Rules 2006. If I recall correctly, it was issued on 7th of December 2006, right? So we had those, this is the first time we were now pushed towards a framework of accounting with which we were not very conversant, right? We were pushed towards this. And then after 2006 came 2015. With 2015 came the introduction of Ind AS. Those of us who were still grappling with the accounting standards suddenly had to face the force of Ind AS, the complications that were brought in by Ind AS. And the institute was on its feet. By the way, that Ind AS, the term Indian Accounting Standards, was coined by the Institute of Chartered Accountants of India, right? So we had the Ind AS coming in. 2015 we had the Ind AS, right? But still, we were a profession which was still relying a lot on audit, because the tax audit, despite the enhancement in the limits, it was still there. And then we had the audit under the Companies Act 1956. But mind you, we also had a small change at that time. We had the Companies Act 2013 being brought in. Companies Act 2013 brought in a new dimension. It talked about fraud. It talked about auditing standards. It gave a legal sanction to the auditing standards, saying that every auditor must also write that he has complied with the auditing standards. I'm talking about 2013. So I spoke about 2006, I spoke about 2013, I spoke about 2015. Now, these were the changes that a chartered accountant, those of us who are here, who are of my age, say in 50s or 60s, would be seeing those changes. But the bank audit was still there. Bank audit was still there, right? And the chartered accountant still had a good existence. What happened was something that impacted Sushil Goyal. At that time, he was in the council. Rajendra Kumar was not in the council. 2017, GST was introduced from the podium of the institute, by the Honorable Prime Minister. And GST became a game changer. Because, you see, we were, for example, me, I was more of a direct tax professional. A Rajendra Kumar would be an indirect tax professional from the very beginning, or Sushil Goyal. But you see, we were not so much indirect tax professional. GST forced us to be indirect tax professionals. That is the change that took place. Chartered accountants of yesterday, I'm not talking about today, the chartered accountants of yesterday, that was the push. But what happened was, the chartered accountants, they adapted themselves to the change. They saw there a great opportunity. They saw there a great opportunity. They embraced GST. And with the institute having these certificate courses and popularizing the GST, even today, both these gentlemen will agree, they are GST experts, that the background material on GST that the institute has published is one of the best publications in India on GST, right? So see, we embraced GST because we found that there was a great opportunity there to be had, right? And then there was a change in 2017. The institute was, you see, having unfettered powers of discipline, regulatory function. Yesterday, A.C. Chakravarti was saying, what about our autonomy and things like this? He was saying that. I'm not going into autonomy and this business, unless some of you ask in the question answer. So institute, but in 2017 came something called NAFRA, right? And for the first time, we had an oversight body which was looking into all the cases that we do audit of public interest entities. For example, listed companies, you see, NAFRA was the regulatory body instead of the Institute of Chartered Accountants of India. That was still yesterday. Today, that is, you see, today, for example, in this conference, I think what was spoken was ESG yesterday. Today, what was spoken was artificial intelligence. What was spoken about was fraud catching, right? So those were the things that is being spoken about today. And I told Ravi at some point of time that, Ravi, you must tell us what is the future of true and fair. With the artificial intelligence coming in, does true and fair have a future? Right? So that is something we'll have to grapple with. And in the future, ESG. I think yesterday you had a session on ESG. The difficulty is, people they say, environment, what has a chartered accountant got to do with environment? Why should we be bothered? S, society or social, what we have got to do with S? Why should we have a session on that? G, governance, yes, we might think about it. Somebody else told me, Devashish, artificial intelligence, that is for engineers. Why has the institute got itself into all this? Are you going to develop softwares? That is, you see, those are the questions that people are asking, right? Fraud catching. Are we going to be fraud catchers? We are auditors, not investigators. In the future, are we going to be investigators with AI coming in? This is another question. So you see, today, what the way I have this thing, I have with me Robin Banerjee. I have told him, first of all, to take us through in about 6 to 7 minutes about his viewpoints on the future. Ravi will then take up, he's a vice chairman of Audit and Assurance Standards Board. Ravi will take us through audit in the past, audit at the present, audit in the future. Then we will have about 5 or 7 minutes discussion amongst us, and then the most important, 15 minutes dialogue with all of you. Those of us who would like to ask questions, you see, for the sake of time, you may write down your questions and send it across, and let me assure you, I'll take it. Because I will cut down the time of the speakers and take your questions. Even if your questions are controversial, you are not happy with the institute, not happy with the past president, not happy with the council members, you can write. and we'll try to see, we'll try to answer your questions, right? I will try my best to to hear some of you speak, and those of us who have a mic in their hand must get the mics ready, because you see, we would like to have this session where there's a lot of dialogue between both the groups. So that's how it is. So, ladies and gentlemen, fasten your seatbelts. We are going to have a very interesting, and I'm going to make it a bit spicy and maybe a bit controversial session. So with these words, may I now request Robin Banerjee, who has come all the way from Bombay, to share his thoughts with us. Robinda, please, come.
Good afternoon, ladies and gentlemen. Good afternoon, my dear professionals. It's not easy to sit and discuss the future when lunch is almost around the corner. I need to time my watch. It's 7 minutes to 1, and I'll try to give you an overview as to what I believe is the future of we, the chartered accountants. The topic here is past, present, and future. Debashish took a very wonderful journey to how things evolved in the past. I'm going to delve into the future, the big macro pictures which I believe are emerging for all of us here, including the world at large. The first trend. India, as you know, is the 5th largest country in the world, almost 4th, neck to neck with Japan. The world's global GDP is $110 trillion. I'm rounding it off. Actual number is 113. The second largest, of this $110 trillion, the largest country in the United States, $30 trillion. Then China is $20 trillion. I'm rounding it off. India today is about $4.2 trillion. The trend, the future, if I have to peep into the future with a binocular, by 2050, ladies and gentlemen, India is going to be bypassing the GDP of the entire European Union. Entire European Union will bypass 27 countries. European Union happens to be about $19 trillion, which means we would be at par with China in 2050 and surpassing China in 2050. The next information you may not be aware of. India, by 2072 to 2073, will be the largest country on earth, bypassing the GDP of the United States of America. This is the future, ladies and gentlemen. It's not my number. It is numbers given by magazines which are not very favorable to India, which is The Economist magazine. There are some assumptions behind it, but assuming for a moment it happens, just think what will be in store for you and me. So trend number 1, India is on this path of becoming the largest GDP, largest country on earth. Trend number 2, this could be very controversial, cryptocurrency. Fasten your belt for next 2 minutes and let me explain to what is it. You will decide yourself, all of us are chartered accountants, whether it's a currency or not. You can't store it very easily, it's not acceptable everywhere, and the prices fluctuates widely. Obviously, it's not a currency. But more importantly, crypto or Bitcoin for a matter, has a value. Everything which has a value is dependent upon demand and supply. So, if Bitcoin today, as I'm talking to you, is about $85,000, by the way, it was $1,15,000 just 10 days back. The price of Bitcoin has come down by 25% in the last 10 or 12 days, 2 weeks. Think, if it has a value, there has to be demand, there has to be supply. If the demand goes up, price goes up. If the supply goes up, price comes down. Have you ever heard the demand for cryptocurrency? Is there a newspaper, any Reuters information, any WhatsApp information? You will never ever get the demand information. There is no demand information for Bitcoin or for the matter cryptocurrency. You will say, okay, demand to hai nahi, but what about supply? What's the supply? Have you had any information about the supply of cryptocurrencies? There are 1,200 active of them. Bitcoin might give some information from time to time, but nobody is audited. Nobody knows that the information is correct. Ladies and gentlemen, how can a currency have a value which has no demand and supply information? 90% of crypto is used by the terrorists, the underworld, people who want to deal in drugs and so on and so forth. So future, crypto is not going to vanish away, but crypto is not going to take over our currency. That's the future. Many of you are advising on crypto, I'm quite sure, but as a wealth manager, because it is subject to fluctuations and demand and supply, which is not auditable, not more than 5 to 10% of the wealth should be in crypto, and the future is crypto will get some sort of regulation for sure. In India, as you know, crypto is not illegal, but not legal. So it will get monitored, but in the future, crypto will be there, but we need to be careful about this currency. The third trend is mergers and acquisitions. Quickly, I'll try to tell you in 1 minute time that more and more companies who are manufacturing are not investing in greenfield sites, they are going for brownfield, which means they're acquiring a company. Even 10, 15 years back, there was the concept of CDMO, contract development manufacturers, was not present. Today, there are manufacturing companies who own manufacturers, only manufactures, doesn't sell. And there are companies who sells, but does not manufacture. And then hundreds and thousands of them. Nike does not manufacture its shoes. It is manufactured by someone else, and there are thousands. Mamaearth, for instance, the cosmetics company, very famous company. They don't manufacture. Mamaearth doesn't manufacture its cosmetics. It takes it from someone else. This concept of the CDMO versus marketeer, greenfield versus brownfield, this is going to enhance significantly. As I'm talking to you, ladies and gentlemen, every year there are $5 trillion. $5 trillion, essentially this year is $4 trillion, $4.2 trillion already. M&As takes place. Opportunities for you and me. Therefore, focus on mergers and acquisitions. How to advise it, how to make it happen, how to make it successful. Acquisition, valuation, and so on, so forth. Sky's the limit. So the third trend, ladies and gentlemen, is mergers and acquisition. The fourth trend, how I can stand here and talking about the future if I don't talk about AI. You know exactly much more than what I know about AI. The way I see in the future, AI is not going to take your and my jobs. This is an overstatement. It's not going to take your and my jobs. We will have to adapt and adopt AI, artificial intelligence, use it and make our clients much happier and give them more information, more power to extract what the customers are looking for, how analytics will happen, how feature trend is going to happen. You will have to use it as you go along. As I'm talking to you already, AI shares globally is absolutely on the downtrend. $1.2 trillion of market capitalization has been wiped out from AI value, market value in the last 7 days. And the trend is not going to go away. AI, I wouldn't say is a bubble, but it's a maha bubble. So please don't worry. Learn AI, adapt it, adopt it. It is not going to take your and my job. And the last one, Devashish just mentioned, I have to mention ESG. E for environment, S for social, G for governance. For you and me, chartered accountants, E means BRSR report. We prepare BRSR, business responsibility and sustainability reporting. That's part of the E. What will happen in the future? The world is becoming warmer, and the world is dissipating. Why? Because the globe is getting warmer. And therefore, in order to get the warming sorted, we have to focus on emission. E has a lot of things, environment is a lot of things. Future, ladies and gentlemen, you will find more and more two trends are going to take place. Every company will have to report on BRSR. Today, just 1,000 listed companies. I'm quite sure in the next 2 to 3 years, you will see every listed company has to do BRSR. That's a great opportunity for all of us. Who will prepare BRSR? You and me will have to prepare BRSR. Who else knows how to prepare BRSR? That's a great business opportunity, which is going to happen. And number two, lot more focus will be on emission. We can discuss as we go along. SES, S is basically CSR. We don't have to bother about it. Social. G, governance. You and me are responsible for governance. Governance laws are going to become more and more stringent. Why? Because tomorrow we are going to get money more from equity rather than debt. Debt givers have a lot of control on my balance sheets, but equity holders have little control of balance sheets, especially the retailers and the armed janta who invests in companies. So governance is going to get much more tougher going forward. To summarize, there are 5 trends, ladies and gentlemen. Ladies and gentlemen, you are sitting in a country which is going to be the largest country on earth. This is the place to be in. Number 2, cryptocurrency. Be careful. It is not a currency. Therefore, be careful what you do with it. Long term, I doubt whether it will remain as popular as it is today. Number 3, merge as an acquisition. That's going to be the future. More and more companies are going to merge and acquire and so on and so forth. Great opportunity for you and me. Artificial intelligence is not going to take your jobs, for sure. But we have to adapt it and adopt it to be a better value creator for our customer. And the last is ESG. World is getting warmer. World is in a way to dissipate because of climate warming. You and me will have to play a much more important role in this area. As I see, we, the chartered accountants, the government is going to depend upon us to make reporting more stringent in the matter of ESG. Thank you, ladies and gentlemen. These are the 5 big trends which I see.
Ravinder, thank you very much for having shared your thoughts, the 5 points that he has spoken about. Ravinder, let me just make you feel a sense of the reality. He was talking about BRSR, right? The full form is Business Responsibility and Sustainability Reporting. 1,000 top listed companies are required to report on BRSR. Now, raise your hand. How many of you do BRSR reporting? How many of you? Raise your hands. Any of you, if you have done BRSR reporting? You said the future, right? You said BRSR, only 1, 2. So only 2. So that is the situation. You see, we do talk about it, but we also know that is the future. But then you see, they will all tell you that you have told us about ESG, but what about the opportunities? That's what they will tell you again and again. And then at some point of time, which I will ask you this question, there's this thing that why we should get into E of ESG. What a chartered accountant got to do with the environment, right? An auditor has got to do with environment. So I will ask you this later on. But then, ladies and gentlemen, we have Ravi Patwa with us. And Ravi is the Vice Chairman of the Audit and Assurance Standards Board. He is also a Central Council member. And as I was coming, I was speaking to his Chairman, Cypriya. Now, the Audit and Assurance Standards Board is now totally grappling with a new standard. The change of this standard called SS600, Group Audit. Right? Those of us, again, many of you would not be doing SS600 because that is basically for bigger companies. Right? So she was saying that this is the way to do, this is the way to change. So with Ravi, he dabbles with audit every day. So may I request Ravi to let us know what are his views on the future, on the past of audit. Ravi, please.
Thank you, Devashishda. I recognize the presence of Rajendra Kumar P, my council colleague, and also the presence of many past chairmen, past council members, Sushilji, past chairman, Manish and Sumitji, I can see. There may be others I am missing out. All the branch representatives, branch chairman and managing committee members and seniors in the profession, my dear friends, ladies and gentlemen. A very good afternoon to all of you. So I have been instructed to speak on auditing profession yesterday, today and tomorrow. And I have been instructed not to speak about anything else except auditing. So I'll follow suit, sir. Well, if we think of the auditing profession yesterday, obviously the focus was on financial accuracy. The evidences were all physical. The focus was on cash book, journal, ledger, and vouchers. The sampling procedure was fully based on judgments of the auditor, and the judgment was not based on data. And gradually we moved into compliance checking. Now what is happening today? Today there is a lot of emphasis on compliance testing and on fraud detection. The most important thing in auditing today is fraud detection. The focus has changed to risk assessment based materiality checking, and on the basis of materiality, the samples are selected. We have moved from judgment based to risk assessment based sampling. Now, evidences today are both physical and digital. Use of technology driven tools have come to play a major role in the auditing today. But the most important thing today is perhaps the increasing stakeholders' expectation and the increasing regulatory overdrive coupled with the expectations of the regulators. You have spoken about SA 600, sir. Now, the regulators believe and they expect that the group auditor will have to be responsible for all the audits under the group, for all the financials under the group, even if it is a group having 600 subsidiaries or hundreds of joint ventures, hundreds of associates. You know what happened in DLF, which had 600 joint ventures, associates and subsidiaries. Now, the regulators are expecting that the group auditor should be held responsible for all of them. With due respect and to all the regulators, perhaps they never did auditing. All the auditors here will understand that it is impossible to, comment on the subsidiaries, joint ventures and associates along with commenting on the group audit, on the CFS that is. Now what is the way out? What can happen in future? Of course, the institute is struggling to, come out with a revised SA 600, which will also please the regulator, whereas it does not, put too much of responsibility on the group auditors. Now, since you had asked of SA 600, I'll speak a little, maybe a couple of minutes on SA 600 and then move on to what I expect to happen in future. Perhaps the only way out, sir, is that the group auditors take more responsibility to ensure that the regulators' expectations are matched to a certain extent. How do we do that? First of all, again, concerning from the group audit's perspective, there has to be a materiality threshold. And the joint ventures and subsidiaries which are not material for the group as a whole should be taken out of that. Secondly, the group auditor himself cannot obviously audit the entities. There will be separate auditors for the entities which are in the lower level of the group. Now he has to perhaps, as the group auditor, judge the competence of the auditors of the subsidiaries. Now, how do you judge? You cannot evaluate the competence of the auditors who are auditing the subsidiaries because they are also chartered accountants. They are equal with you. How do you judge? Maybe we have to make the regulators understand that even judging, leave aside auditing the subsidiaries and, even judging the component auditors would be extremely difficult. Maybe there can be something that can be worked out. Say, for example, the component auditors should also, if the group audit is a listed entity, the component auditors must also be peer reviewed, like for the listed entities. That could be one way out. We are thinking of several other way outs, but something has to be worked out. Now, what is going to happen in future? So far as auditing is concerned, sir, technology-driven full population testing is going to come. Now, there may be a confusion that when I say that the full population has to be tested, we may move towards absolute assurance. I am not saying that. And since you said that you will separately ask me about true and fair, I am not commenting on it now. Maybe I'll put forward my views on the absolute assurance at a later stage. Or if you want, I can speak now also. What would you prefer, sir?
You can speak now also.
Okay. Then while I discuss about the future of auditing, I'll also speak about this. Next, sir, continuous monitoring of data is going to come. Gradually, from quarterly review that we have, we will move towards continuous monitoring of data. There will be a tremendous skill evolution that is going to happen. The auditors will have to, continuously learn new technologies. And they must also learn other things. Say, for example, sectoral understanding, knowing about the business. They have to understand analytics. The audit team must know analytics. Data analysis is going to be a part of auditing itself. The global environment changes, the geopolitical changes, the auditors must appraise themselves about it. The behavioral science, all these sciences, all these, skills have to be imbibed by the auditors of tomorrow. We are, of course, going to move forward to integrated reporting. Already, Robin sir and you have spoken about ESG. The future is of integrated reporting, not only of balance sheet audit. It will not be only financial statements reporting. The financial statement will also comprise of other things like ESG, and will move towards integrated reporting. We will also move towards predictive assurance. Even in case of historical financial statements, we are perhaps going to move towards predictive assurance. Going concern is going to play a very, very major role. In fact, sirs, for the knowledge of everybody present over here, the standard on going concern, the international standard, the ISA 570 has already changed, and obviously we will also have to change the going concern standard soon. What else is going to happen is that the compliance-based auditing is going to gradually go down. We all know what has happened with bank audits. We know what is happening with tax audits with the threshold going up. I fear, as a council member, that very soon the same thing is going to happen with corporate audits. The corporates will also have a threshold beyond which auditing would not be required. In fact, this talk is already there in the MCA. We are fighting it hard. Believe you me, MCA came up with a proposal and gave us the details about the proposal on Friday evening, asked us to give the comment on it within 11 o'clock on Monday morning. A team of council members worked throughout the Saturday and Sunday, along with the team of secretaries of Icai Eye, and ensured that by 10:45 in the morning, MCA has our views, which we are strongly opposing any thought of having even a single corporate not audited in our country. Now moving on to true and fair, sir. We must first understand what is the need behind it. Why is the thought process of having an absolute assurance or true and correct assurance coming? The basic reason is stakeholders' expectation. And why is the stakeholder expectation increasing? Because they want that there should not be a single fraud in the financial statement certified by a chartered accountant. So they need an increased level of trust, and they feel that increased level will come when there is an absolute assurance. Now if we see whether it is a possibility or not, now these views are totally my views, not the views of the institute. My own views on absolute assurance are totally different. Sir, financial statements, the figures that we put are based, many of them are based on estimates and judgments and assumptions. There can never be an absolute assurance on figures based on judgments and assumptions and estimates. If that has to happen, the auditor has to have a greater level of reliance on the representation by the management, which obviously would not be the thing which the regulators want. Now, because of the business complexities, the massive technology usage, and the large geographies, further, having an absolute assurance is not practical at all. While full population testing is going to happen, but that too has to be based on materiality and risk assessment. So 315 is not going to go. And full population testing based on risk assessment and materiality should not be confused with having to track each and every transaction through the process of the transaction. Sirs and madams, while technology and AI can help in full population testing, they would never be able to judge the management bias. They would never be able to judge the reasonableness of assumptions and estimates. They would not be able to identify the collusions and an auditor's skepticism is not going to come through AI. The forward-looking uncertainties that can only be judged by a professional accountant and not by AI or technology for that matter. So what would change? If not absolute assurance, then what is going to come? I believe that there will be full population testing, robust analytical procedures usage, stronger review, continuous data monitoring, higher level of testing of internal controls. These are going to come. Hybrid assurance, integrated reporting, integrated assurance are going to come. But the audit reports will change to a higher level of reasonable assurance instead of absolute assurance. There will be predictive and forward-looking insights in the audit reports perhaps, but definitely not an absolute assurance. With these, I will end for the time being, and I'll reply to your other queries later on. And I'm not touching any other field of, future of the profession. Thank you very much, friends.
Thank you very much, Ravi. Thank you very much for having shared, because it's a very difficult question, the future of true and fair. But, Hariram Agarwalji says that we don't have too much of time, and I have not got a lot of questions from the floor, but let me ask you. How many of you feel, you have to raise your hand, right? Before I ask Robinder on this. How many of you feel that environment is an area for chartered accountants to be in? Environment, out of ESG, environment is an area for chartered accountants to be in. Environment. Only a few, say about, I would say, how many hands can I see? About 20, 25, right?
But sir, if you ask the negative question, the hands will be lesser.
Yeah, whatever it is. But you see, please note, ESG environment is going to be one of the very important aspects of the profession. You just cannot turn a blind eye to that. So one of the messages or takeaways from this, and which Robin Banerjee also has been saying, the BRSR that we are having will go to other companies also. It will not be restricted to listed companies. The Ministry of Corporate Affairs is already thinking about trying to let it go for other companies. So those of us who still think that environment is not our cup of tea, you must change your attitude. What is going, you see, Institute already has a publication on greenhouse emission. Have a look at it. It's a guidance note. Have a look at it. You see, you'll find what the Institute is doing. Institute already has a course on BRSR. Join the course. You see, it is very, very useful. So that is because I would have wanted to ask this question to Robin Banerjee, but since we don't have time, I'm not asking him. The second one, why there's so much of buzz about AI? AI has been there from 1950s. AI ka aaj ka cheez nahi hai. AI has been there from 1950s. But if somebody can tell me why there is so much of buzz about AI in recent times, in the past 1 or 2 years. AI has been there from 1950s. But what has created this buzz? If somebody can put his or her hand and tell me what is the reason for this. The buzz, let me give you a hint, the buzz has actually started from 2022. If somebody can tell me why this buzz recent times. AI has been there for a long, long time. But 2022 से ये बहुत ज़्यादा चल पड़ा. अभी हर एक जगह AI है. So क्या हुआ? If somebody can tell you what actually happened. This is very important for us to understand. Yes, tell us. Right.
The primary reason behind it could be the substitution of human efforts.
I said what happened. मुझे AI, what is happening in AI, मुझे नहीं चाहिए. Something happened. Something happened because of which you are now talking about AI. A senior person like me is talking about AI. Right? So something has happened in recent times because of which we are talking about AI. Yeah.
One should only think simple, then you will get the answer. Very, very simple answer.
Yeah. Anybody? Yes, please. You can stand up and no. जरूरत नहीं आप बोलिए ना. Huh? No. Anybody? Yeah. Please. Yeah. Can you have a round of applause for him? What happened was, ChatGPT was introduced in 2022. And with the introduction of ChatGPT, the whole landscape changed. It is because of ChatGPT. We are talking about AI. Very correct. Right? So this is number 2, which I thought. By the way, Ravi was telling us about what the ministry follow the winter session of the parliament. Follow the changes that are going to be brought about in the Companies Act. He was saying that for audit also there could be thresholds. Private company audits. Follow that winter session. It's going to be very, very important. Very, very important. Right? Then the last one. How many of us feel that in the future, Ravi is talking about crystal gazing the future, Robin Banerjee has also crystal gazed the future. In the future, true and fair is not going to be very important. What is going to be important is how far you have been successful in catching fraud. You'll be determined, your success as an auditor will be determined by how good a fraud catcher you have been, simply because AI will force you to go for 100% checking. AI will force you to go for 100% checking. So how many of you feel that that is the way? Hum log jab into true and fair, you feel that that's going to be the situation, but most of you are silent. So you still believe that true and fair will continue. You still believe, right? No, it's going to change, right? It's going to change. I believe it's going to change, right? I believe it's going to change. And the last one, which is a bit of a controversial one. I was speaking in Hyderabad, and I and Aniket Talati, we were taking questions. So I said that with AI coming in, with the government of India talking about big farms, that creation of big farms, right? With the institute, with Ravi there talking about networking. Institute is pushing towards networking. With the institute talking about aggregation of CA farms. With the bank audits shrinking. With the bank audits shrinking. With maybe there's a limit on company audit. With the threshold limits going up on tax audits. 60%, about 60% of our farms are small and medium practitioners. What is going to happen to them? What do you think? I said that they are going to be in trouble in about 4 to 5 years if they do not aggregate, if they do not become big. Because that government protection that you are having of getting audit, you see, may not be there in the future. How many of you would agree that that is an area for which the profession will have to think? All of us or none of us? You think that you will survive being whatever we are, will survive? We simply, it will be difficult. I'm not saying that we'll not survive, but it will be difficult to survive because we will not be provided the staple diet of audit. Will not be provided by the government. The government is already questioning. Why should we provide audit? Will not be provided the staple diet of audit. So those of us, I think most of us are small and medium practitioners, we have to think. And what has also happened is today, in the newly pass outs, 90% of my newly pass outs are now going to the industry. They are not coming into practice. Practice is getting a challenge because people, they don't want to come into practice, right? So that is a challenge, and that is, you say, why? Whatever I'm saying, because they feel that there is not much of a scope, right? So people like Ravi, people like Ravinda, you see, in the long run, we'll have to promote this other concept of the way we go ahead at being a chartered accountant. The last point, I'm in the board of an organization called Chartered Accountants Worldwide, and I was there in the board meeting, and I said that, and it caught on very much. I hope it will catch on here. I said that the profession will survive. They were talking about attractiveness of the CA profession. That was the topic which was being discussed. And I said that the profession will do well if the destiny of the profession is linked with the destiny of the nation. I repeat that the profession will do well if the destiny of the profession is linked with the destiny of the nation. Right? The other day, I see somebody, or one of the ministers I was meeting, and I was telling him audit and everything, and he said, Devashish, one thing, tell me straight away, give me some ways of enhancing our GDP of the country. These are the questions that a chartered accountant has to answer in the future. These are the questions on the economy. You have to answer. You cannot say that we cannot say that I only know true and fair. Or Robinda cannot say that I only know ESG. They are saying that all right, ESG is very good and very important. True and fair is also very important, but you're talking about, Robinda started off with saying that we have such a high GDP. How do you contribute towards enhancement of GDP? Chartered account. Bolo, mera desh ka GDP kaisa badega? So we have to be also economists. PM Nadialwala, when he was alive, and those of us who are seniors here, as he used to say, And he used to say with a lot of, regret, that if I scratched the back of a chartered accountant in 1970s, he used to say, he became a president in 1970s, right? He said that I will see an economist if I scratched the back of a chartered accountant. Govinda, this is for you and you will like it. PM, he said that if I scratched the back of a chartered accountant in 1970s, I would see an economist. He said in 1990s, he was saying, if I scratch the back of a chartered accountant today, I see an advocate, because you are so much involved in compliance with laws and regulations. I see an advocate. That economist in you, somehow or the other, he was saying, has vanished. And many of us, we agree with what PM Nariyalwala has said. But I think we are coming a full circle. The economist in us is now coming back. I will now just end and give Haramji, 2 minutes. I will just allow Robinda to give 2 minutes comments, his concluding remarks, and Ravi 2 minutes, and then we'll try to end this session. Robinda, please.
Thank you, Devashish. Time is up, but I want to highlight one topic, which is a matter of our survival. The survival is actually ESG, not ESG, but E. I will take about 120 seconds. What is global warming? When we switch on our car, we generate carbon dioxide. When we produce electricity or coal or steel, produce electricity out of coal, we generate carbon dioxide. The carbon dioxide forms a canopy on the earth. What happens? The sun ray comes through the earth, or in spite of the canopy of carbon dioxide and carbon monoxide, but the heat does not dissipate back because of the carbon dioxide and carbon monoxide canopy. Had that canopy not been there, the heat would have dissipated and the balance of the climate or balance of the temperature would have remained. But because of the generation of carbon dioxide, the heat is not getting dissipating, the temperature of the earth is going up. As per scientists, if the temperature goes up by 1.5 degrees centigrade, 1.5 degrees centigrade, as compared to the pre-industrial era, which is 1900, the earth will not be able to produce food grains because the heat of the earth. 1.5 degrees, 5 degrees temperature centigrade. Ladies and gentlemen, last year in 2024, the average temperature on earth has gone up by 1.52 degrees centigrade. The threshold has been crossed. The scientists have also said that if it crosses 2.0 degrees centigrade, we will all die because we will not have food grain to eat. The civilization is on the verge of extinction, ladies and gentlemen. It is on the verge of extinction. We, the mankind, will have to do something to control this temperature. Cannot now go up beyond 1.5, 1.55. The result will be harsh reporting on temperature. Why temperature is going up? Because of emission. We are emitting carbon dioxide, we are emitting dust, we are emitting whatever, but carbon dioxide is more important. This reporting is going to become more and more stringent. As I see the future, every government on earth will say, iska reporting karna hai. And reporting who will do? It will you and me only. So the unfortunate truth is, in fact good for us, the matter of saving the mankind through appropriate reporting and control is going to fall on you and me. Thank you, ladies and gentlemen.
Thank you very much. Ravi, please.
I'll start off from where Robinda ended. It's really sad that environment is actually so important, but the man at the helm of the affairs of the largest economy of the world feels that it is all bullshit and we shouldn't even be thinking about. Anyways, let us not go into that debate. So far as my points are concerned, to conclude, couple of things. Number one, friends, we are all fed by business houses, by businesses. Businesses are only going to pay us if they feel they are getting something more in return. So value addition is the answer. If we add value to businesses, a part of that value they are going to pay you back. In case of compliances, they feel it has been thrust upon them, so they do not pay us. Hence, we need to focus more on adding value to business houses in whatever manner possible. Number one. Number two, we have to understand the society is much bigger than the businesses. Business is only a subset of the society. So society is most important. No profession can survive unless the society feels that they need this profession. And the society will feel that they need us if we can develop that trust in the society. We had that trust. Even today we have that trust. But we need to increase on the trust level. Rather than, people of society starting to feel that we are not trustworthy. Number one. Number two. And we also have to remember that government is also a part of the society. So the regulatory authorities and the government are also waiting to have that feeling that we are trustworthy and we must be trusted, that we are giving something back to the society and the nation. We may shout from the rooftop that we are partners in nation building, but until and unless the people on the other side of the table start saying that we are partners in nation building, we are actually contributing to the nation, which we are actually doing, but we are unable to make them understand that we are doing. And until and unless they start feeling that we are contributing to the nation, there is a problem with the profession. So the onus is on all of us together, is on the whole profession to ensure that we increase the trust level in the society and we make the whole society understand how we are contributing to the nation, how we are contributing to the society, even to the environment. Thank you very much, friends. Thanks a lot.
Okay, madam, please.
Again, a very good afternoon, esteemed colleagues and distinguished guests. On behalf of EIRC, I extend my heartfelt gratitude to all dignitaries and participants who have graced this technical session at the Golden Jubilee Regional Conference of EIRC of Icai Eye. First and foremost, I wish to thank our esteemed moderator, CA Dr. Debashish Mitra, our past president, for guiding today's discussion with such wisdom, clarity, and making it so interactive. My sincere appreciation goes to CA Maheshwari Patro, Chairman of Brahmapur branch of EIRC, for his warm introduction. I extend my thanks to CA Hariram Agarwal, our Secretary EIRC, for his active presence and support. We are honored to have our esteemed panelist, CA Robin Banerjee from Mumbai, and CA Ravi Kumar Patwa, our council member and past chairman of EIRC. Your insight on the evolving role of CA from challenges of yesterday, the dynamics of today, to the provisions of tomorrow have made this session truly enlightening. Your experience and viewpoints will empower us to keep the ethical standards high and adapt us to meet the futuristic needs of our profession. Thank you.